Nio posted some phenomenal earnings for their Q2 2020 with beats across the board by some pretty significant margins here. You can see non-GAAP EPS beat by 10 cents, revenue beat by nearly 25 million with a whopping 146.5% growth year over year. Gross margins were positive by 8.4% versus negative 33.4% last year in Q2. Deliveries, as we already knew, set records this quarter, over 10,300 vehicles delivered. And finally, margins on those vehicles were positive at 9.7% versus negative 24.1% last year in Q2. And all of this resulted in the stock actually up pre-market, but then the market opened and Nio closed down 8.5% on the day after some aggressive selling in the stock. So after some phenomenal earnings here, guys, we just saw the numbers. Why did Nio Stock sell off? Why did Nio Stock crash here today? So I'm going to go through the earnings here today with you guys, and I'm going to walk through some things that I think may have triggered this selling here in Nio Stock. There's a couple of things in the earnings report that I believe could have contributed to this, but make sure you stick around to the end because I'm going to share with you some other things that I found which could have also led to more selling here today. Anyways, guys, drop a like down below if you want more Nio videos like this, and also don't forget to subscribe. A lot of you guys watch this video and don't hit that red subscribe button, so what are you waiting for? Hit that down below and hit that bell notification as well so you don't miss any new videos. So honestly, let's take a step back for a second. What is going on with Nio today? Just look at this table here. If you look at year-over-year comparisons for all metrics reported, they improved quite significantly year-over-year, from revenue to deliveries to margin. Nio became a much more efficient business in Q2 2020 like never before. Even losses got much better than last year, but guys, they were still quite significant losses. Net losses improved by 64% year-over-year, but there were still losses that the business did suffer. Now, if you watched my last Nio video, I discussed how investors would be keeping an eye on the losses, and to be honest, I believe this improvement was actually quite good, at least on a surface level, for Nio, and they actually even reported gross profits here versus losses last year and last quarter. So again, improvements year over year. And this was actually a record quarter for the company with deliveries and all this stuff. So what the heck is going on? Oh wait, it gets even better. Comments from the CEO read that the current constraints on the production will be lifted in the near future, and they go on to say that they are confident that the production capacity can meet the accelerated demand of their models. Nio also reported positive cash flow in the quarter, which is a strong sign that if they're able to sustain and keep growing like this, then net income profitability should follow in the coming quarters. So again, another bullish sign for Nio. Nio also committed to continuing to focus on improving operating efficiencies across the company. So this means that they feel that with their recent improvements with efficiency in the company, they can become a profitable business at some point, hopefully in the not too distant future. And everything else that I keep reading in this earnings report just gives me more and more of the same. Strong quarter, record numbers, going towards profitability, like everything's just trending in the right direction. Now here's one thing that I actually caught. Their expenses declined year over year. R&D expenses, which you would imagine would be massive for this type of industry, EV in general, it's a growing industry, a lot of money needs to go into this to actually stay ahead. They actually dropped their spending here by 58.1% year over year, and selling, general, and administrative expenses also dropped year over year by 34.1%. Now while this is good, you know, they're more efficient with their capital, I guess there also could be a case made here that they may fall behind if they keep cutting back on research here. Another case that I can think of that investors were not happy with was that they were able to pull in much less losses this quarter in net income because their spending was cut back quite significantly. What would happen if they kept their spending on R&D and all this other stuff consistent year over year? Would the numbers actually look as good as they did? Let's take a look. So here's a comparison of their income statement comparing year over year, and the numbers are in RMB, but on the far right you see the US dollar conversion. We see revenues with 3.7 billion RMB versus 1.5 billion RMB, but then below that their total operating expense last year was 2.7 billion RMB versus this year's 1.4 billion RMB. Now this is a difference of around 1.2 billion RMB that they reduced with spending, and if you compare it with US dollars, that means that they cut back spending by around 180 million US dollars this quarter versus Q2 2019. Now, if we add this to the net losses reported this quarter of 166 million USD, that gives us a net loss of nearly 350 million US dollars for the quarter. So now here, compare that 350 million to the net loss of Q2 2019 of $418 million or so. The company only really improved their net income by $68 million, despite cutting back expenses by $180 million, and despite these record growths here with 146.5% revenue increase, record deliveries, and all this kind of stuff. They only really decreased their losses by around 20% if expenses in things like research and development remained the same. So this kind of raises the natural question: how much does this company really need to cut back on spending for critical things, in my opinion, for the business, like research and development, to actually become profitable or get closer to profitability? Is the only way they can become profitable by not spending at all on these improvements? Or is there a way that they can actually increase their spending in R&D, kind of be ahead of the curve? Because competitors are going to catch up. They're going to be spending a ton of money to catch up here with Nio's technology and everything else that Nio has going for it. And I have seen this time and time again with other industries where if you're an innovator, you're kind of a leader in a certain market, if you don't keep spending and innovating and just being ahead of the curve, you will get left behind. So really, bottom line with this is that it does kind of concern me a little bit that they're cutting back on spending for important things for the future of the business, just so they can show better net income here, which in my opinion is just kind of like a short-term thing. They shouldn't really focus on that, but hey, it's what they chose to do this quarter. But who knows, maybe I'm nitpicking here. That's just something that I caught in the earnings report. And remember my last video, guys, I talked about 3 things that you should look out for in this earnings. They were profitability, they were revenue growth, and they were guidance. We know that they improved on their net income, so they're getting closer to profitability. We know that they grew revenue quite substantially, set records really for the company. But how did their guidance for the rest of the year look? Well, for Q3, they estimate between 11,000 and 11,500 deliveries. And if we take their high-end estimate of 11,500 and look at this chart here, it shows a 140% improvement year over year, but quarter over quarter it's only an 11% increase. Perhaps investors were expecting more. Maybe they wanted to see some hyper growth quarter over quarter as well. I'm not really too sure about that, but this could be another reason for selling the stock. What it could also signal is that there's some weakening demand if they only estimate an increase of 11% in deliveries after their strongest quarter ever. But I've said this before, the auto industry is seasonal, so this could also be playing a factor here for lower guidance than some may have been expecting. So my perspective here is, yeah, I do agree that 11,500 is kind of a low number considering they hit 10,000, almost 10,500 in the last quarter. Arguably during a very tough economy when, there's a global issue going on and China's facing other economic issues, they were still able to post records, and maybe that momentum is slowing down. Or maybe they're just sandbagging numbers here and they post incredible growth for Q3 2020 next quarter, and maybe this was just a buying opportunity for the stock and the stock rallies much higher at that point. The thing is though, the company did release July numbers already for the deliveries, and it did come in softer than June. So this could worry some investors into thinking that August and September may also come in softer, and Q3 may actually come in with fewer deliveries than Q2. Regardless, this is all speculation, and the last thing I really want to touch upon here before I share my thoughts on Nio Stock today is the balance sheet. So the assets of the business really look pretty good after Q2. Cash sits at around 1.5 billion, current assets sit at 2.1 billion, and their total assets including long-term investments sit at 3.2 billion, a strong showing. On the liability side, current liabilities, so obligations kind of due in the next 12 months, sits at 1.8 billion, so this is covered by current assets of 2.1 billion, and then total liabilities including long-term liabilities sits at 3.2 billion, which is the same as their total assets. So I personally wouldn't necessarily say this is a good balance sheet with a asset to liability ratio of 1. I'd say it's an okay balance sheet, and obviously could be much better, but at least they have their short-term obligations covered, which reduces the risk of losing your investment here in Nio. Okay, so that was kind of the run through of the earnings report and things that I could kind of find in there that could have led to the sell-off. But guys, I think there were 2 other main things that actually contributed to the big selling here today. The first is profit taking. Remember, Nio is up year to date 250%, and after seeing the guidance for Q3, investors were probably thinking, hey, you know what, things can't really get much better here for the company in the short term, so let's just take our gains off the table and move on. Remember, if you bought this stock in 2019, you could have got it for a pretty cheap price, and you could be up massively in that position right now, so can't really blame people for taking some profits off the table. The second culprit is good old Golden Snacks. Now, a few weeks ago, Goldman Sachs downgraded Nio from a neutral to a sell, and at the time it resulted in a 14% decline of the stock on that day, all thanks to Goldman Sachs. And guess what? Today, the same analyst came out at Goldman Sachs and reiterated their sell rating, but raised their price target from $7 per share to $7.70 per share. And while they quote-unquote raised their target, it's still a lot lower than the price of the stock is at today. So this could have led to investors selling the stock, because remember, if Goldman Sachs believes it's overvalued, it must be, right? It's unfortunate, but we're seeing a lot of headwinds here with the media and just kind of the business in general when it comes to Nio stock, and that's contributing to some selling here. We saw very similar things last year with Tesla, with the media, especially Goldman Sachs, going completely against this company, pushing prices incredibly low in this company, but look at where Tesla is at today. Now, I'm not saying Nio has that same potential, because they don't really vertically integrate every part of their business and control every aspect of their business like Tesla does. So there's not as much potential as Tesla, but just because an analyst downgrades a stock does not mean it's a good opportunity to buy into that stock. For me personally, I'm going to be holding on to my shares very closely. I have no plan to sell out of my Nio shares, and I'll be riding this for the long term. Been holding it for about 1.5 years now, and like I said, this was bought when I bought Tesla stock as well, kind of to offset each other for different markets, but you know, things have changed over the years for the better for both businesses, and I'm happy continuing to hold Nio in my portfolio as a spec play. Either way, guys, hope you enjoyed this video. Let me know in the comment section down below of what you thought of this earnings report. Were you happy with what they reported? Were you surprised the stock sold off? Let me know all of that in the comment section down below. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.